Hey all, welcome to ShareTreck. Good morning and welcome to the morning show. This is Raj here, and thank God it's Friday. Yesterday we had a wonderful end of day live stream. It was nice to see some of our community members making profits already. So it seems the market is heading in the right direction. And of course, we had Apple and Amazon results, which cheered the market. So let's see what's happening today. Let's get started with our morning show. I'm in a very happy mood today because post-market action yesterday was really wonderful. Yesterday we saw Apple and Amazon share the market, as I mentioned earlier. However, Roku had disappointed. So let us look on the glass half full point of view, and at least that's how the market has seen. So the overall sentiment in the market has improved, and that's a good thing. Apple delivered a revenue of around 83 million as compared to the street expectation of 82.8 million. So they came in slightly higher than expected, and at least 1.6 billion over the same quarter last year. So that performance quarter to quarter is really impressive. So that's one of the best highlights of Apple. Their profits fell compared to the same quarter last year, and they came in at around 1.2 per share. However, market had anticipated 1.16, so they were still better off because they had done excellent expectation management, in my opinion. The positive was that they reported less negative supply chain impacts than they had prepared the market or primed the market for in their Q1 earnings call. And therefore, the market had a lower expectation and they delivered higher. So it's a good case of expectation management. However, the company felt impact on the service revenue and its non-iPhone segments like wearables. And this could be a cause of worry for me, basically because service segment usually grows better and has greater margins. So I'll be watching that carefully. In the other end, you have Amazon reporting a marginal beat on cloud revenue with growth rate slowing almost a third when compared to the previous quarter. It could be an industry-wide phenomenon as both Google and Microsoft had same issues. However, AWS grew slower than both Google and Microsoft, marginally slower. I think Google grew around 40% and maybe Microsoft was higher, slightly below that. But Amazon has come in lower than them, and that's a matter of concern. And I have mostly focused on cloud revenue when I look at Google, Amazon, and Microsoft. But this particular underperformance by Amazon in this sector in AWS is a matter of concern for me. However, Amazon registered a revenue beat coming in at 121.23 billion. That's almost 2 billion more than what the market expected. It posted an EPS of negative 20 cents against an expectation of positive 12 cents per share. That's a big miss. However, costs during the pandemic did play a part. I think Amazon prioritized delivering goods on time and making sure that they had fully stocked up. More than anything else, even though their same-day delivery might have suffered a little bit, they still continued to make sure that if you wanted something and you would find it on Amazon and you could buy and you could get it in a reasonable time, given the overall constraint that everyone faced in the economy. I think that did cost them in terms of profits, but I think from a business point of view, that was a good move. In the long term, I think it's going to help Amazon retain market share and grow more on it. The other notable earnings happened today are going to be AbbVie and AstraZeneca. They report before market open, and I'm recording now at around 7:41 a.m. So the results I don't think are in yet. I did a quick Google search. I couldn't find any. So we'll see what happens with them. It'll have bearing on our biotech segment. So we need to look at that. Now with that said, I think I would like to quickly turn your attention to the results from P&G. They have arrived. Let me just briefly take you there. So here we have the P&G reports. The headline reads, P&G reports mixed quarterly results, warns significant headwinds expected to persist. And I think they exceeded both on revenue and EPS. So if you look at it here, earnings per share, $1.21 adjusted versus 1.22 expected. So they were just about there. And revenue was 19.52 billion versus 19.4 billion expected. So overall, they have done well. The only concern for them is that they are expecting it to be difficult going forward. So there could be a strain on their EPS and revenue. They also reported that net sales rose 3% to 19.52 billion. So there is a growth of 3% in sales. I think that they are definitely having a lot of headwinds due to the inflation, and this doesn't look very well because people definitely need all the products that P&G manufactures. I mean, most of the products, they are indispensable. So we'll have to see what happens here because even the Fed has become a bit dovish. So these could all be signs of potential recession. With that said, I think we should go and have a look at what's happening in the pre-market price action and see where it is headed at. And let's do that. Let's go to the TradingView platform now. So here we are in our TradingView platform. I'm going to look at the futures first, as always. Futures are looking positive for Nasdaq, and it seems that we have broken through our resistance already and then come back down. Our resistance was at 12,908.50. And pre-market is up 0.93%. So I'm hopeful that today we are going to break through this resistance and convert that into a support. Next, let's go on to the indices and see what's happening out there. If you look at US oil is continuing to gain. It's got a solid support from the 200-day exponential moving average. It has also broken through the resistance of the 9-day exponential moving average, converting that into a support. But I'm expecting that it has got to bounce back from this diagonal line of resistance because it's in a bearish channel at this point of time. And with even the Fed indicating that there's going to be recession, I think we should see some let up in the oil prices. However, on the other side, there seems to be higher industrial activity because copper prices are going up. And that should probably signal that maybe oil demand will also go up. There's another reason for oil prices to break through this diagonal line of resistance. And that is the change in the sourcing of oil and gas by Europe, because Europe is going to stop buying oil from Russia, and Russia has to replace the revenue. So earlier, oil and gas could just be supplied very easily by Russia without having to depend on oil tankers. But now if Russia has to find new markets, which is not Europe, then they definitely need more tankers. So they'll be in the market for more tankers. And at the same time, Europe is now switching its purchase, and it's buying from the Middle East and the US. So as I mentioned earlier, US and Middle East are also going to look for tankers. And therefore, there is going to be a shortage of tankers. Potentially, there will be increase in the freight charges, and all of those will feed into the price of the oil. That's the feeling that I get. Maybe that's what could push us for oil price to go above the diagonal line of resistance out here. So with that said, let's go and have a look at QQQ. QQQ pre-market is up it's up 0.92%. That is 2.84 points. And it's still above our horizontal line of support, which is at 306.53. So we are almost $6 above our line of support. And we have also managed to jump over the 100-day exponential moving average pre-market. So if this persists, then we are likely to check our ultimate bear channel guardrail, which is this diagonal red line of resistance. And this is what we have to be keeping in mind. We should not get carried away by this bull channel out here, because unless we break through this diagonal red line of resistance, we are still in a bear market, but a bull channel inside a bear market, like the ones that we had seen previously out here and out here. So we want to see this to go all the way across this. And by the looks of it, I think we won't get the verdicts for at least until 6th of September, unless the market has got really good reason to just jump across. So slow and steady, things will move properly. Our MACD is looking great. It's bullish. Momentum is also picking up. It's above average. So I think QQQ looks good today in all aspects. S&P 500 also is above the line of support of 401.19. It's almost $7 above that. And it's looking great. Again, it has broken through the 100-day exponential moving average. So we have our next resistance out here, which is at 415.60. And after that, we have the 200-day exponential moving average. And with regard to S&P 500, I would say that it doesn't have a similar scenario like what we saw on Nasdaq. because its line of resistance for the bear channel has already been pierced, and we have bounced back from one level of support already. So our next challenge is going to be out here, where we already are at 408.50, because this is where we could have probably reversed back. But we will see what happens, because this is where most of the times we have stumbled a little bit. So it's a very minor resistance, nothing major to look at. But I think our major resistance is going to be 415.60, and we are marching towards it. IWM Russell's index is also positive pre-market by around 0.3%, and it's already above where it was yesterday. And we have our support at 183.72. We are already another almost $2.50 above the line of support. And we also converted the 100-day exponential moving average into support yesterday, and that still remains. MACD is still bullish. Momentum has got still a long way to run before it can be overbought, and it's absolutely positive and strong. So Russell's looks great today. Dow Jones Industrial Average is up 0.22% pre-market, and it's still on a bull track, and it's at the peak of where it was yesterday, and it's above 100-day exponential moving average. So overall, everything is looking good. We are still on a bull channel out here. And when we look at the VIX has dropped today further. So we are going closer towards the $20% mark. And when we come to 20, I think a placid environment will be available for us. At the same time, we should note that somewhere around 19.75 and 20, we may have a potential bounce back up. So we have to be wary for that. And that will coincide with the bear channel out here, which we want to break through. So that will be a very critical point. So do not assume that you're in a bull channel yet, because it could be a bull market rally within a bear market. So that becomes clear at a later time. So that's what I would say about VIX. And then looking at put call ratio, we are at 0.94. So we are bullish there. And if you look at XLY by XLP, our risk of situation was not present yesterday. So we would have lost a little bit on genomics out there. US dollar index is looking pretty good. It has dropped down further and bounced off the 50-day exponential moving average. And right now it's up 0.06% marginally up. But MACD is looking very bearish, and momentum is also below average. So I would hold out for US dollar to fall further. With that said, let us quickly look at what has happened with the companies that reported yesterday. And one of the first one I want to see is Apple. As you can see, Apple is on a really, really good trend upwards. So it's on a bullish trend, and the results definitely helped them. And pre-market, they're already at 161.22. That is a gain of 2.46% from yesterday's close. So Apple is looking very strong indeed. It has got a bullish MACD, and momentum is above average, and there is still plenty of runway before it can become overbought. So great things for Apple. And the other company that reported yesterday was Amazon, which has gained 11% before the market open out here. And it's also on a bull channel, as I can see here. So that is the bullish channel, and it has got a gap that has to be filled. I don't know if it's going to fill it today. It's in a hurry. We still have a 100-day exponential moving average that has to be negotiated. So I think the markets are looking positively on Amazon. So with that said, I want to go and have a look at our genomic sector and see where they are. So I'm going to sort this out just to make sure that we have the biggest losers on the top. Teladoc lost big yesterday because of the bad results, and it's trying to eke back a little bit of those gains. They got a 0.42% positive this morning. And we have Bluebird, which was down 7.25 yesterday. No pre-market trades, no pre-market trades for Verve either. Nothing for Allogene. And CRISPR Therapeutics is down 1.19% pre-market. Invitae is up 1.01% pre-market. Beam has got no trades pre-market. Intelia has got no trades pre-market. Vertex has no trades pre-market. ArcG no trades pre-market. IMTX is up 2.23% pre-market, and Editas is up 1.22% pre-market. Pfizer is up 0.35 pre-market. IDNA no trades. Regeneron no trades, and PSCB up 0.45% pre-market. DNA up 1.41% pre-market. Caribou down 0.39% pre-market. Sorry, Novartis down 0.39% pre-market. Caribou down 1.70% pre-market. SQZ no trades pre-market, and Illumina no trades pre-market. So it's a mixed bag today, and I think that the ones that suffered a lot yesterday are likely to be positive today, and the ones that gained the most yesterday are likely to be the ones which might show some softness today. So that's what I think would happen in the markets today. With that said, I'd like to bring this video to an end. If you like this video, do not forget to press the like out there so that YouTube can show our channel to many other viewers. And if you're not yet subscribed, please subscribe and help us grow this channel. Also, please join us at the 3:30 p.m. live stream on weekdays. Today is options expiry also, so the closing 30 minutes are going to be exciting. We'll be monitoring the last 30 minutes and also discussing among ourselves about things that happened during the day, and also individual victories about anyone who has made any profits today. And of course, after market close, we'll be doing a technical analysis on all our shares in the watch list in order to determine what's going to happen the next day. With that said, bye for now.